Can I buy stocks with a credit card? Robinhood? Did you know that the average credit card interest rate exceeds 17%, significantly higher than the historical average annual return of the S&P 500, which is approximately 11.88%? Additionally, most brokerage firms prohibit direct funding of investment accounts via credit cards due to the associated risks and fees. Robinhood, a popular commission-free trading platform, does not permit users to purchase stocks directly using a credit card. The platform requires funding through bank transfers, wire transfers, or other approved methods. This policy aligns with industry standards, as most brokerage firms restrict direct credit card funding to mitigate potential financial risks for both the investor and the institution. While Robinhood doesn't allow direct credit card funding, some investors explore indirect methods to invest using credit. One such method involves purchasing gift cards from platforms that offer stock gift cards redeemable for fractional shares. These gift cards can be bought with a credit card. However, they come with fees ranging from 99 cents to $2.99, plus an additional 3% debit or credit card fee per gift card. Another indirect approach is obtaining a cash advance from a credit card, depositing the funds into a bank account, and then transferring them to a brokerage account. However, cash advances typically incur fees of 3% to 5% and attract higher interest rates than regular purchases. Interest on cash advances begins accruing immediately, without a grace period, making this method costly. Investing in stocks using borrowed funds from a credit card is generally discouraged due to several disadvantages. High interest rates on credit card balances can quickly erode investment returns, especially if the stock market underperforms. Additionally, the fees associated with indirect methods of funding investments via credit cards can further diminish potential gains. There's also the risk of accumulating debt that cannot be repaid if investments do not yield the expected returns, potentially leading to financial instability and a negative impact on one's credit score. On the positive side, using credit can provide immediate access to funds, allowing investors to capitalize on timely market opportunities without waiting for bank transfers to clear. Some credit cards offer rewards or cashback on purchases, which could slightly offset transaction fees when purchasing gift cards for investment purposes. However, these advantages are often outweighed by the high costs and risks associated with using credit for investments. In conclusion, while it's technically possible to invest in stocks using a credit card through indirect methods, Robinhood does not support direct credit card funding for stock purchases. The high interest rates, fees, and potential financial risks make this approach generally inadvisable. Investors are encouraged to use traditional funding methods, such as bank transfers, to finance their brokerage accounts, ensuring a more secure and cost-effective investment experience.